really challenging days in a row, very difficult price action, some of the hardest, most frustrating price action we've experienced in a while. Just a really harsh market to trade right now. Minus $6,700 on the 250K portfolio and minus $1,450 on the 50K portfolio. This market environment is extremely challenging. We had a 20K run up last Friday, and this week it's just given it all back based on this price action in the market. So we're down on the month, still up on the year, and up about 15% on the year, and this drawdown puts us at around 9%, a 9% drawdown on a 250K account. And so day trade only strategies. Let's look at the market and go over what's going on in this market and the trading system signals that we're going through. You just look at this price action. This is some of the sloppiest price action. Yesterday you saw this, and then today just more of this. It's like it's hard to believe anything real is actually going on. And underneath the market, it looks very bullish technically to me. Fundamentally, it's gone up. It ought to go down. We're due for a downturn. The fundamentals are negative. Market ought to go down, but underneath, the technicals are very bullish. Ready for a breakout to the upside. The reason I say that is bullish. The characteristic of bullish stock markets are narrow ranges, and so extremely narrow range during the day session on Wednesday, the lowest we've seen since 2021. And then yesterday we had all this on CPI. Today, not much better. But what you saw yesterday was this stop running type price action around 1:40 Eastern time in the afternoon, and then all the way back to the highs. Today, the same thing. Right around the same time, 140, kind of concerted sell-off, bring in sellers, and then run it back to the highs. And so these stealth stop runs and then move to the highs are typical of stealth bull markets. Narrow ranges are typical of stealth bull markets. And so it'd be great if they would, if this stealth bull market would break out a little bit. Stealth bull markets tend to press and press and press and then break out to the upside with more significant ranges like we did last Friday. We came into last Friday. Fridays are our best trading day by far lately, and you can see on the chart, this is the NASDAQ. We look at the NASDAQ a lot because the price action in the NASDAQ is sharper and distinguishing, and so you can really see what's going on in the NASDAQ more clearly, and it kind of leads the way in the market. Narrow index leading the way for a lot of our strategies are NASDAQ strategies, and you can see last Friday how we had FOMC last Wednesday. It was very choppy. The Thursday before was very choppy. Came into a frustrating day, and then just had this smooth breakout up about 20K on the day. And then as markets sometimes seem to have personalities, and if you assign a personality to it, it's like the type of market that's trying to get everything back, chops in an extreme way all week long, and not much range. And so that's what's happening. So minus 22K actually on the week, and down about minus 2K from coming in on the month from where we were last Friday. So it was good that we had this gain last Friday, and it's harsh to manage this. We're looking for a bounce here near the drawdown, and so here is the drawdown curve. 23,000 is the worst case drawdown. We are close to that. Quick, sharp drawdown to these levels. Historically, you see drawdowns to these levels are very sharp, and I'm okay with a sharp drawdown. Would like to see a sharp recovery. Don't want to experience a new market environment now where it just trades like this all the time. It's almost unreasonable. This amount of chop is just almost unreasonable with everything that's going on in the market. But we are managing the risk, and so if we break these worst case drawdowns, I have a strategy to cut back. I don't want to trade in and out of these type of markets all day, and so I have a select set of strategies that will trade if we continue to experience this type of market environment. That will take the type of strategies like robot and AT 2020s that will try to capture the trend. Viper 2021 is also doing well, and so we'll trade those type of strategies and not take all these trades intraday that get caught up in this chop. And so let's look at the trades on the day. Here's the NASDAQ trades. Cobra 3, one of our marquee strategies that does really well over time, stopped out today. Just this here it is, just this stealth bull market. It tends to signal. I've seen this before historically in the past when volatility is low. It continues to signal short trades and then rallies, and then it signals a short trade and then rallies. But it doesn't rally very much, so that when you're long at the end of the day, it pulls back, and so your long trades don't make much either. And so eventually there is a breakout, or the market would never go anywhere if it was always in the same place. We know the markets eventually make a move. And so let's look at tick reversal. Took the long trade, so you had a parabolic move down, then a parabolic move up, and then sideways. Tick count trend was a nice short on the day. We had zigzag. It went short, then it went long, and then it exited right there. And so both of those trades were down on the day. So we had 1, 2, 3, 4, 5 NASDAQ strategies, only one winner. 1 for 5 on the NASDAQ. Very hard price action. You can really see the stop running, and then reversal on EVP1. Have been looking for a potential EVP1 long trade on these move higher, but it's been very stealth. And so stealth bull markets oftentimes are quick to signal short trades, and then very slow to signal long trades. And so we're just a different market environment this week. And Cobra 3, this is Cobra 3 NASDAQ on this. Cobra 3 S&P also went short today, and then the market rallied, minus 625. Tick wave, minus 825. No adaptive moving average. Gap fill, took the long trade, stopped out near the low, minus 725. And we had momentum reversal was up on the day, plus 400. Tick count trend turnaround dynamic, minus 825 on the day. Opening chop, minus 3750. Narrow ranges overall. We had 1, 2, 3, 4, 5, 6 S&P strategies trade today, and only one winner on the S&P. So 1 for 6 on the S&P, and 2 for 11 overall. 2 for 11 on the trades for S&P and NASDAQ. You see the tick is very narrow. I want to show you the commitment of traders as well as the tick ranges. So the tick ranges were higher than they've been in over 20 years. They expanded the ranges. This is the monthly NYSE tick, and then since this time period, since the end of last year, they've converged. And so these ranges have decreased, and you see several months in a row where you have higher lows in the NYSE tick and lower highs. And then this month, you see this high is slightly higher than last month. I guess you could call that maybe a subtle bullish trend. It's hard to make that call. It's so subtle. But the main thing I want you to notice is the tick ranges are narrowing. They diverged, and now they are converging in narrower tick ranges. I want to show you the commitment of traders report next. This is on the S&P, which is more liquid. You can see some of the highest short positions by non-commercials, minus 355. The speculators are net short as well. And let's look at the weekly on this. So you can see more history. And so this pink, the lowest. This is the lowest level, or actually the highest short position by non-commercials that you can see on this chart, going back to this time frame. Oftentimes there's a push to cause those shorts to cover, and so it'd be interesting to see what happens here. You can see there the blue line is the commercials, the non-commercials are purple, and the speculators are red. And so the speculators and non-commercials are net short, bigger than they've ever been in this chart, and then the commercials are long. And so typically the commercials are the smart money, but it'll be interesting to see how this plays out. Pointing out that this is the largest short position that we see on this chart, going back on the weekly chart. So those are the trades on the day. Looking forward to our best trading day of the week tomorrow, and we look to bounce on these drawdowns, and we had some nice gains on the year to buffer some of this. Was hopeful that we'd get a better, cleaner breakout on our new equity peaks, but these market conditions are almost unreasonable with this amount of price action chop. But looking forward to tomorrow, maybe we get another big trade day on the long side or the short side, capturing a trend. Friday seemed to be the weekend resolution trade, so looking forward to tomorrow's trade. And as we go into the weekend, these are the trades on the day for Thursday, May the 11th, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.